Aibuan, Vanakkam, Assalamu alaikum, and a very good evening. Welcome this evening to Economic Outlook 2021, brought to you by the American Chamber of Commerce in Sri Lanka. We indeed have a lineup of esteemed and distinguished panelists who will spend the next hour expanding to you and taking a deep dive into the economic policies of the government for the last year, what it means in terms of what we can look forward to in the year 2021, and of course, the budget 2021 as well, and what it means for us in terms of economic policy, in terms of the economy at large, and to each and every one of us, both in terms of both as business people as well as the general population of Sri Lanka. Without further ado, let me hand you over to your moderator for this evening, Mr. Deshamanya, who will take you through the rest of this evening's proceedings. Deshan, welcome, and over to you.
Thank you very much, Rai. I would like to invite all our guests to turn on their cameras and also join in as we begin today's proceedings. Before I start the introductions, good evening, gentlemen. Joining us today is an eminent panel comprising of three gentlemen who have gone to the very top in their respective fields. We have got Professor Deshamanya Professor W. Lakshman, Dr. Kapila Senenayake, and also Honorable Professor Ranjith Bandara, who I will now introduce to you a bit more in depth. To speak about Professor W. Lakshman, he is the 15th governor of the Central Bank of Sri Lanka. He received his secondary education at the Vidyaloka College in Galle and the undergraduate education at the University of Ceylon in Peradeniya. He obtained his bachelor's degree in economics with a second-class upper division honours. His doctoral studies were at the University of Oxford, where he obtained his philosophy degree. Now, moving on to Dr. Kapila Senenayake, he started his academic career in 1994 by entering the University of Sri Jayawardenepura and completed his first degree, a Bachelor of Commerce Special, with a second-class upper division. He holds an advanced diploma in Management and Administration from Sri Lanka's Institute of Development Administration and Sri Lanka's Foundation Institute. He is also a Master of Public Policy from the Graduate School of Business Strategy in the Hitotsubashi University in Japan. His PhD in Economics has been completed in 2016 at the University of New South Wales in Australia. And finally, Professor Ranjith Bandara is an MP representing the national list of the Sri Lanka Podujana Peramuna. He served as a senior professor of the Economics Department at the Department of Economics in the Faculty of Arts at the University of Colombo. He is also the head of the Business School of the Colombo School of Business, having done his bachelor's at the University of Colombo. He also has a PhD from Queensland. Now, moving on, we will get right into it with the questions. And let me start with Deshamanya Professor W. Lakshman, who is the governor of the central bank. Professor, explain the central bank's intention to establish a permanent single-digit interest rate in the process of restructuring the economy. Professor, I think you have to turn your microphone on. Yeah, just let me repeat, Professor. Explain, please, the central bank's intention to establish a single-digit permanent interest rate in restructuring the economy and moving forward.
Hey, good evening, everybody. The low interest rate regime, which we are trying to establish, has its economic rationale. The role of the interest rate in a market economy has been examined in detail by various people, putting forward different points of view. I will just mention a few couples of variables in which the interest rate has an important role to play, but the relationships are not always as expected in some analytical perspective. Interest rate is a double-edged weapon. Then many people think that interest rates and investments are interrelated. The relationship is generally considered to be one of investments to go up with the interest rates at a low level. This may not always happen that way. That's why I'm saying that these relationships are not always as expected. Then there are relationships drawn between interest rate movements and movement of savings in the country. Interest rates and are related then also to the time value of money. And also interest rates are related to the rate of inflation in the country. These relationships are often examined in some particular way, but the relationships do not always work in that direction. We had a very long history in Sri Lanka of high interest rates. Of course, during our very early period after independence, for example, before 1977, our interest rate regime was very low. 3%, 4% kind of interest rates. But there was at that time a strong argument against low interest rates. The argument coming from agencies which came to advise Sri Lanka, for example, the IMF and also the mainstream economics textbooks. The criticism at that time was that low interest rates lead to shallow finances. With recommendations of financial deepening after 1977, interest rates rose to very high levels. I can remember, for example, treasury bill rates went up to 18 to 20% levels during some periods. Upper margin of lending rate ranges rose to as high as 30% level during this period. Part of the reasons was high inflation rates at the time. There were, of course, various implications of these high interest rates, which anybody can understand with a little bit of knowledge of how commerce works, how investments work. Since the beginning of last year, we are trying to maintain a regime of low interest rates in the country on a sustainable basis. For example, if I compare end 2018 and January 2021, if I may use a few interest rate concepts which are widely used. Standing deposit facility rate from 2018, it had gone down from 8% to 4.5%. Standing lending facility rate went down from 9% to 5.5%. Average weighted whole money rate from 8.5% to 4.54%. Average weighted lending rate 14% to 10.55%. This is indeed lowest recorded in history. The objectives of this policy is to promote investments and entrepreneurship. And there are signs that low interest rate policy is providing results in this particular direction. Then there is also the possibility of reducing government borrowing costs by keeping the interest rates low. Based on average cost of financing of treasury bills and treasury bonds, government has made savings of close to rupees 200 billion in 2020 in comparison to 2019, a 3% reduction in the government expenditure on maintaining government budget. The adversely affected are, however, the deposit holders. When the low interest rate regime helps the investors and entrepreneurs, there are the deposit holders who are being affected and who are complaining all along. There has to be other institutional mechanisms to take care of these problems, their problems. Now, interest rates are at historic lows. Policy is to maintain that regime. The objective, of course, is economic growth through sustained investment. This is my brief answer to your question, Deshamanya.
Thank you very much, Governor. I wouldn't call it a brief answer. I think you were very descriptive and got the numbers out as well, which helps a great deal. I think next I want to move on to Dr. Kapila Senenayake. Dr. Senenayake, from your role at the Treasury, I think one of the big discussion points that has not only created a bit of discourse in, let's say, the finance market side of things, but also in society in general is that of the foreign currency reserve situation. What would you say are the measures, and I think a lot of people would like to hear this, given that we do have a bit of debt repayment that needs to be done. What measures have been taken rather in order to preserve the foreign currency reserve position of the country, and how do you think these decisions will either positively or negatively affect the remittances as well?
Good evening, all of you, and it's a good question. As you may face all the newspapers and other public arena. So government and also the Central Bank of Sri Lanka has taken several measures to preserve the international reserve position of the country and also to revive the external sector since the local outbreak of COVID-19. If I explain in detail, the central bank has already entered a current reserve agreement of US dollar 400 million in July 2020 with the Reserve Bank of India. It's under the SARC agreement. On the other hand, the central bank entered into repurchase agreement with the Federal Reserve Bank, New York, as a temporary source of US dollar liquidity. In addition, financial assistance from several multilateral lenders such as Asian Development Bank and also the World Bank, especially focusing on COVID-19 related financial requirements, also help strengthen the international reserve level of our country. Central Bank of Sri Lanka also introduced sell-by forex swap auctions for licensed commercial bank to provide foreign currency liquidity on term basis without depleting the foreign reserves, with the accessibility to the external liquidity sources have been restricted owing to the uncertainty created through pandemic situation. If I going through in detail, so government has made progress in ensuring future financing, including the foreign currency term financing facility from China Development Bank. The central bank has already also initiated a discussion with the People's Bank of China regarding the swap facility of RMB 10 billion, that is around US dollar 1.5 billion. In the meantime, central bank as well as the government also looking at possibility of getting further short-term swap facility of US dollar 1 billion from RBI. in addition to that, the licensed commercial banks were directed to suspend facilitation of import of non-essential commodities such as motor vehicles and also some of the luxury items. I think you have heard of this thing. In the meantime, restriction on outward remittance of certain identified capital transactions, including the reduction in the maximum limit on migrant transfer were imposed. It's also done by the Central Bank of Sri Lanka. I think you may have also heard about this introduction of a special deposit account scheme, so which will attract more foreign exchange inflows. With this time constraint, so I perceive that these measures will help to improve liquidity conditions in the domestic foreign exchange market and also ease the pressure on exchange rate, enabling the central bank to absorb foreign exchange from the market on a net basis during 2020 to build up foreign exchange reserves in the long term. So, as part of the second question, how will this affect the remittances in general? So these policy measures to reduce foreign exchange outflows while encouraging exports and inward remittances may improve net foreign exchange inflow near term. So this will help to some extent. On the other hand, the authorities are in the process of expediting ongoing negotiation to secure some foreign financing facilities such as loans from multilateral bilateral lenders and also some of the potentials of arrangements. In addition, the budget 2021 has been proposed to improve merchandise and service exports and also the remittances inflows and attract foreign direct investment, which will help to alleviate external pressure over the medium term. And also you have seen the newspapers and also the public media that the government has now tried to open the borders when the COVID-19 pandemic subdues. This would be a welcome development in terms of tourist earning of the country, which would strengthen also our services account to some extent. However, I think there should be an urgent need to raise foreign financing using all available options to preserve the level of gross official reserves and also the macroeconomic stability. So, which will ultimately help to restore investor confidence in the medium term. So, thank you.
Dr. Senenayake, just to touch on something you did mention, do you think in the medium term we have some debt obligations to be met? Are you confident some of these moves will ensure that we can meet these obligations?
Yes, so far we have never defaulted in debt payments. So when you look at our project pipeline, we have $9 billion. So this will go for about 5 to 6 years. For the 1 year, it would be about 2 billion. So, but now we are re-examining our project pipeline. I think you may have seen that we have stopped the LRT project, and now government is keen on looking for more domestic sources rather than foreign this time. Yeah.
Right. Absolutely. Thank you very much, Dr. Kapila Senenayake. I now move my attention to the Honorable Professor Ranjith Bandara, who is also an MP from the national list for the Sri Lanka Podu Jana Peramuna. Now, Professor Bandara, I want to bring to the public's attention also that you were a staunch critic at times of the economic policies of the previous government, and I'm assuming, would have had a few years to speak about policies that you believe would work in favor of the general public over the course of compiling the 2021 budget. The government promises prosperity and the government promises progress. Critics say things are not going to be as easy as the budget says it will be, even calling it a fairy tale at times. Now, could you explain just a few factors that are the fundamental makeup of the 2000, and also what is it that the government aims to achieve through these, and whether these objectives are they practical?
Having me, and let me begin with why I was critical about the economic policies of the previous regime, and hope you are very well that what they have done was the damage one could think of bigger than that of anybody has done since independence. When the President Mahinda Rajapaksa hand over the economy to his predecessor, H.E. Maitripala Sirisena, it was 5.5% growth on average over a period of 10 years. And the economy, what we inherited, was growing at a rate of 2.6%. And so you can imagine how well they have handled the economy and how effective their economic policies are, or policies were. Now, the same people are advising us by criticizing our economic policies. I'm eager to ask why they didn't apply the advice they are trying to give us to taking the economy during their time to the next level. And we don't really see any point in those criticisms that they are passing through various social media. Of course, social media are free and no free reviews. You could say whatever come to your mind. Those who are running the economy know very well. Let me finish. Those who are running the economy know very well how difficult to run not only the economy of Sri Lanka, the whole world. And why can't people realize that this is a global pandemic, and Sri Lanka being a tiny nation, or a rather tiny nation with a tiny economy, and our struggle is much less than that of the struggle of so-called developed countries. We didn't allow none to die starvation, and still we treat people, and if you look at how well we have been taking care of this serious health issue in the country, it is amazing. It is easy to say, difficult to do, right? Now, what we are aiming at, when we took over the government in 2019 November, the situation was completely different, and it was overwhelming a victory by the President Gotabaya Rajapaksa, and he presented the general public, look here, this is the policy that I am looking at implementing my tenure of coming 5 years. So our a target was to have 6% economic growth. It's not easy. And we knew that we need a big push. And Professor W. Lakshman explained part of it, how difficult and what to be done. And Dr. Senenayake looked at another aspects of it, where anybody could understand how difficult of achieving 6% economic growth. And we were aiming at achieving the 6% of economic growth, maintaining the inflation at a sustainable level. And the rate of interest, exchange rate, you name it, any macroeconomic variable to be managed in such a way in order to achieve 6% of economic growth. And we need to invite investors to invest in Sri Lanka. Now, Sri Lanka is not anymore a country which has a competitive advantage. What Singapore offer, we may not be able to offer. Doing business index is not quite favorable in Sri Lanka yet. There are lots of improvement to be made. Therefore, implementing a policy without a criticism is impossible country like ours. Now, say for example, investing someone in port development, investing someone elsewhere in Sri Lanka has always, you would see that there is a protest. Now, the biggest joke what we have seen in 2015 was that they stopped the running of the economy and then restart, and it was too late. So the consequences are we are experiencing now. Therefore, I am asking you to wait and see how well we will implement these policies and moving towards the target that we have set in the budget of 2021.
Thank you very much, Professor Bandara, MP. I want to now move my attention back to the Governor of the Central Bank, Deshamanya Professor W. Lakshman. Now, Governor, with the central bank's efforts to maintain a dynamic and resilient financial sector in the country, can you please elaborate more on the prominent financial sector policies for 2021 and beyond? Things like the debt moratorium, interest rates, and also maybe touch on the facts that companies within the finance sector are not necessarily performing well. And we've had quite a few issues in that area that affects consumers as well.
Yeah, Deshan, if I am to focus on the main financial sector stabilization policies for 2021 and beyond, within 3 minutes or 4 minutes, it's an extremely difficult task. I try.
You can just start on it.
These have been extremely difficult times, unprecedented all over the world, 2020 and this year so far. COVID-19 first wave prevailed from March 2020 until about July. A revival of the system was broken down. Revival of the system, which could be seen from August onwards, subsequently broken down by January 2021 because of the second wave. So during these difficult times, of course, we had to do a lot of unusual things. The government and the central bank acted to help protect livelihoods as well as businesses, focusing particularly on small businesses and medium-sized businesses, and also agricultural sector activities. We had to provide through the banking system a series of moratoria, debt moratoria. We had to provide to the banking system unprecedented amounts of liquidity. We maintained low interest rate regime, loans to government from the central bank through various instruments in a time when the government revenues also were badly affected by the pandemic and related developments. All these instruments used to help livelihoods and businesses had to be worked out through banks and other regulated financial institutions, because the central bank cannot deal with the public directly. The institutions which deal directly with the public are the banks and the other financial institutions. Now, as a result of these activities, their bottom lines have been affected badly. The measures we have implemented required, therefore, various measures to monitor, regulate, supervise banks and financial institutions, so that we could ensure that they were doing what they were expected to do to achieve the livelihood protection and business promotion activities. Existing regulatory requirements, number of them were relaxed on banks to ease out things for them and also other financial institutions. As a result of the activities of the central bank, there are large volumes of liquidity in the market, which these institutions could have used for providing loans to the businesses and individuals who required the loans. There is a challenge before the central bank to be flexible as well as firm, allowing banks and financial institutions to see out-of-the-box solutions while being also remaining stable. Anyway, the banks remain relatively strong, but there are problems in the non-bank financial institutions, as Deshan, you yourself have mentioned. There are three categories of banks, three categories of financial institutions, non-bank, as we have made the classification in recent times. There are strong ones, there are moderately strong or moderately weak ones, and the weak ones. We have categorized them as roughly A, B, and C categories. There were the unpleasant episodes of failing commercial bank, failing financial institutions and their closure. 6, distressed institutions have been closed down or their licenses cancelled. ETI Finance Limited, Swarnamahal Financial Services PLC, Finance Company, The Finance Company PLC, Central Investment and Finance Limited, Standard Credit Finance Limited, and TKS Finance Limited. And we have developed a master plan within the central bank to achieve a reasonable, stable situation in the non-bank financial institution sector through basically consolidation and merger among different items in the different institutions in that sector. Medium to long term, the central bank has planned new regulatory frameworks will be coming. The new Banking Act has been proposed and we are working on it now. There are going to be also amendments to the Finance Business Act, and there will be also a review of existing directions to be in line with changing regulatory arena and market developments. There are also various other central bank activities which have helped strengthen and promote the financial sector, promoting sector stability. One of those other things which I would like to mention here is the increasing digitalization work following the rest of the world trends. Following world trends, much has been done by CBSL over the recent past to facilitate the growth of financial technological development such as mobile apps, wallets, and interoperable retail payment cards. Lanka QR system introduced in 2018 has been extremely popular, has become extremely popular. The objective of all these activities, digitalization activities, is to produce a less cash using society. The conversion of digital technologies helps enhance efficiency and formalize transactions. Accordingly, digitalization of transactions facilitates financial system stability as well as promoting economic growth. Then, among the other type of activities which I would like to mention is the work the central bank is doing, has been doing for quite some time to improve financial literacy. After all, the people who are dealing with the financial system has to be literate enough to use the services offered in intelligent ways. For financial literacy improvement programs have been going on for some time. Much remains to be achieved, and faster the achievement of these objectives, I am sure, will be contributing to improve the stability of the financial system. Thank you very much.
Thank you very much, Governor, for that rather elaborate answer yet again. And you did very well to cover all the areas as well. And I'm sure our viewers.
I sometimes take on my academic hat.
It's always good to have that academic/technical view on things. I'm going to now move on to Dr. Senenayake. Dr. Senenayake, you've been in this area with concern about finance from an official perspective for the better part of your career, for most of your career at least. You see, from the early 2010s, we've had one project, the Port City project, that many people look forward to with a great level of eagerness. And these days, upon the completion of the project itself, we are now hearing of regulatory frameworks and special legislation for Port City. My question to you is, with all the hopes pinned onto it, what are the expectations with regard to Port City and its potential to potentially take the Sri Lankan economy to the next level? And do you think these expectations are misplaced, or it's right for the public to assume that Port City? Dr. Senenayake, I think you have to unmute your mic.
As you correctly mentioned, so it starts in 2013 and started development activities in 2014. And as of now, the reclamation of land has already been completed, as you can see. And the construction stage is to start in this year. So as such, we have issued relevant assets to accommodate this project, mentioning the respective tax concessions. So I will explain in details if you know that tax exemption part as well. So as per your questions, the expected economic benefit is enormous because it's a separate land, and also there are some construction is going on. So it has also one-off impact during the project period, and more importantly, it is operational stage has a recurring impact every year, because if you builds one building, or then there's another project is coming up, or like that. This is kind of recurrence is going on. So in terms of employment, so it is expected to generate 175,000 to 200,000 direct jobs, as well as indirect job will be 30 to 40,000. So it is also a good opportunity. And on the other hand, the foreign employees are expected to be employed in this financial city. Then it will give you also create more opportunities for knowledge transfer to the local people, and also it will improve the productivity, and also it will help to income generating activities and also the capabilities. In addition, this will give the attraction of foreign direct investment. During the land reclamation, foreign direct investment is expected to come from mainly two specific sources. One is from port city investment. It is about $1.4 billion USD, and the second one is from the FDI from leasing the land. So as end of 2020, the total FDI received to the port city projects amounted to $989 million. So during the construction stage, developers will invest in developing building infrastructure. So there will be 5 iconic towers coming up. In the operational stage, there will be a recurring FDIs due to reinvestment of profits. So that's also good impact. When you look at the balance of payment, it will also benefit from the attraction of FDIs and also the other few sources of revenue. For example, significant foreign exchange inflows can be expected due to the sale of apartments and also housing to foreign parties. That's one of the benefits. This has also important to Treasury as well, because it will generate more revenue to us. So we expect to receive revenue through leasing out port city lands on a 99-year basis lease, and also the additional revenue will be received from the government from the charges and also the approval of license, because it's kind of rather than manufacturing, this is a services oriented project. So we can receive some money from these licenses. So apart from that, we can get some other revenue sources from the stamp duty, VAT, income tax, also the other employment income. That's the major development. I don't know whether you need the tax concession that we have already given to the projects.
Just for the sake of some of our viewers, Dr. Senenayake, the port city already has in place a special plan to provide concessions to potential investors in order to attract them. Am I mistaken, or am I correct?
Yeah, already now issued the gazette. So they have given 15-year tax holidays for the corporate income tax, also dividend tax, and project implementation period is 96 months. So with that period, the government has given concession for exemption from import duty, VAT, PAL, and other charges, and also the personal income tax also exempted for 30 expatriate staff. So that's also good thing, I think. And on the other hand, 75% of unskilled labor requirement will be locally sourced, and 65% of skilled labor requirement also locally sourced, and also the white collar jobs 75 is locally. So it's also good impact to the employment generation aspect.
Absolutely. Thank you very much, Dr. Senenayake. Those were indeed encouraging numbers and encouraging signs that you laid before us. So let's hope that Port City really does take off in the way that the Ministry of Finance, the Central Bank and the government hope it does. And I think the final question of this particular round, I will pose to Honorable Professor Ranjith Bandara, MP. If you can, please just turn on your camera as well, Professor Bandara. We've spoken quite a bit about a lot of the issues that we are facing as a country, as an economy. We've spoken also about some of the opportunities, some of the challenges, but I want to leave the final question to you on something you mentioned earlier, which is the impact of COVID-19. Managing an economy is difficult. Managing the impact of something like COVID-19 on an economy is a little more difficult than that. How do you think, given the needs of the people and given how the people have the requirements, they want a better quality of life, they want to go up in the world, given all this and the demands that they will pose on policymakers, how feasible is managing an economy, particularly the macroeconomic variables, given the impacts of a disaster like COVID-19?
Sorry, we didn't have a proper budget for 2020, and we didn't have time to present a budget for 2020. Of course, we presented one rather to get the approval from the Parliament. And if you look at the figures, at least the expenditure proposals for the budget 2021, you will see how well we have planned to face the economic crisis of post-COVID, plus the inherited the economic downturn from 2015 to 2019, and I don't think that nothing has been done constructively to build the economy during the period of 2015 to 2019. And therefore, we have to go back to the basic. If you take, for example, government explained why that was essential for us to have a low interest rate regime in Sri Lanka. No investor would invest. One, the banks are not ready to share the risk, and the risk is all for investors. Borrowing money at the rate of 24, giving adequate collaterals, do you think any investor will invest? Therefore, one of the biggest challenge is to encourage the local investors to invest in Sri Lanka, because our target is to have a production economy. Now, we are not self-sufficient in food, and the food security is must. Now, hope you remember, we have been locked down literally for 3 months in the first wave of COVID, and still we are moving along with the second wave of the COVID. And you may have seen we have put enough and more effort into our agriculture sector and diversifying exports, and also to encourage import substitution in Sri Lanka, and also to manage the gap between the exports and imports. One could criticize that we have banned certain imports. Yes, we must, because we are not in normal. We are in a new normal. You can't keep importing when you are in crisis. Therefore, managing our external economy was also very important. And also, you may have seen that how well we use the technology to manage certain sectors. Now, in our case, we requested people to work from home. But still, for all, we need to invest more in technology. Now, if you look at the expenditure proposal, the 2020 budget allocate 8,000 millions for technological improvements and 10,000 millions for technopark. And if you look at, there are 36 different items, and which covers every single aspects that to be developed in order to move forward with the economic policy of the president. That is why when the Minister of Finance presenting the budget embrace this is all-inclusive budget. We were trying to cover every single possible aspects that need to be addressed, taking Sri Lanka to the next level. Therefore, 2021 budget is just a start, and this policy will continue for next 5 years, aiming at average fixed % economic growth. Therefore, managing the post-COVID situation in Sri Lanka, in my opinion, is well taken care. Therefore, we should not give up hope. It is not just for us. It is an issue across the world.
Absolutely. Thank you very much, Honorable Professor Ranjith Bandara MP, for that response. I think we have one or two questions from a few guests who are joining us on our live stream as well. I think I'm going to address both to the Governor of the Central Bank. Governor, one of the questions is about stimulus. We've seen stimulus packages sent across to the public in a number of countries to kickstart the economy in the face of COVID and having these lockdowns. Do you think that the 5,000 rupee stimulus is enough, or are there other stimulus packages in the pipeline?
A brief answer, this 5,000 rupee package is a livelihood assistance package, I think, distributed by the government. Indirectly, maybe financial resources would have gone to the government from the central bank through treasury bill financing and all that. But it was basically a government action. The stimulus packages were there in terms of the facilities provided to the banking sector to extend low interest loans. That is, we have given some large sum of money given out in loans at 4% interest rate to basically small and medium-sized enterprises affected by COVID, there were various other loan schemes, financial assistance or stimulus schemes, in addition to what the government, what the Treasury has been doing. Maybe that is enough for the time being.
I think so, because we have to stay on time. And very quickly also, Governor, you mentioned digitalization. Have you got a timeline in mind for the digitalization procedures to take place? And have you got an action plan with the necessary timeline?
Yes, we have in fact declared this year as the year of digitalization. And there are various activities lined up. Discussions and negotiations are going on. Specific cases of things and specific timelines. Unfortunately, I will not be able to share with you. I do not have that kind of information. We are on a plan.
Right, absolutely. Thank you very much, Governor of the Central Bank, Professor W. Lakshman. We have to come back to you in just 1 minute for your closing remarks. So for the final round, I'll start off with Dr. Kapila Senenayake. Dr. Senenayake, candidly speaking, what's your outlook for the state of the economy in the year 2021?
As Professor Bandara explained, we have very optimistic about 6% GDP growth is expected in 2021 because 2020 we don't have a proper budget. So we have 4 water accounts. So we were unable to implement or start new projects. But this budget has given more opportunity to start new projects, and also the government has earmarked 350 million for road development and also the water projects. So that will help to increase our capital capex at about 6% of GDP in this year. So which will definitely help to increase our GDP, and also there's and also the government has given enormous fiscal stimulus package at the end of 2019 and also at the beginning of 2020. So this would help to give breath to entrepreneurs, and which will definitely help to increase our economic activities. So I think 2021 would be the best year, I suppose.
So your economic outlook is positive?
Yeah, of course, yes.
Thank you very much, Dr. Kapila Senenayake. I'm now going to move my attention to the Honorable MP, Professor Ranjith Bandara. Professor Bandara, you've shown nothing but optimism over the course of our discussion, and I'm going to ask you in your closing remarks what your economic outlook for 2021 is. Does that optimism remain? I think you have to turn on your mic, Professor.
It is on. Can you hear me?
Yes, I can.
Not only optimism, and we have a very clear plan to overcome the issues what we are having right now. And I would like to share some of the experience of Second World War. The Professor W. Lakshman know very well how Japanese economy recovered. So why can't we share the same experience? We haven't gone to the ash, but we are somewhere, in a better position for us to move forward. And as he explained, the central bank developed new perspective on monetary policy and liquidity management. However, we should not undermine that we need the new source of foreign earnings, efficient utilization of local resources, identify new export sectors and stimulating the local economy. And we have to identify, at the end, the possible growth sectors. And investing in human resources should also essential. Now, that is why I request you to pay a little attention over the expenditure pattern of the budget. You will see that we looked at some of these critical sectors to be developed over the period of time. So we will be able to get the maximum out of the effort. And therefore, I'm quite positive that this, the effort of getting the economy to the right by the government will be very successful time to come.
Thank you very much, Honorable MP and Professor Ranjith Bandara. My final question, once again, is to Deshamanya Professor W, the Lakshman, the Governor of the Central Bank. Governor, the same question to you as well. You are in essentially what is the driving seat of the economy. As the driver, what's your outlook like for 2021? Governor, I think you might need to turn your microphone on.
Okay.
Yes.
You are giving me more credit than more responsibility than I really am. Anyway, I have been one of the most optimistic guys around. With the change of government and the change of economic policy, movement towards creating conditions for the growth of domestic economics, domestic economy, domestic producers, and also providing conditions for more favorable export growth in the country. COVID-19 itself has provided us with a great deal of important opportunities to change our mindset, to change our economic policy path. For example, in the period from say 1977 onwards up to about 2020, it would have been extremely difficult to introduce even slight restriction on whatever grounds on imports. Now this time that has been made possible by COVID-19. There were other things also with the short period of time that is available. I can't go into details. So there is my optimism that, give me a couple of minutes to explain this. In the world, many countries have identified certain periods in the post-war period, certain years, as their take-off years. Now, for example, Japan talks about its take-off year being 1965. Similarly, there are other countries also. Now, my perception is that we have gone through a difficult period of time and we have gone through changes of policy measures over a period of 70 years or so, but we have missed out this opportunity to achieve the takeoff using the fairly well-known economic historian language, takeoff into self-sustained growth. I don't believe in that analysis, but I use the term. So this 2021 should be the beginning of the takeoff of Sri Lanka into a higher level of growth and development. That's what I hope to see. At least that is what I try to achieve. Thank you very much.
Thank you very much, Governor. Ladies and gentlemen, that wraps up this particular session for today. Before I hand it over back to Rai, I want to thank the very esteemed panel who have joined us for this discussion. Dr. Kapila Senenayake, Director General of the Department of Fiscal Policy of the General Treasury of Sri Lanka. Thank you very much, Dr. Senenayake. Honorable MP, Professor Ranjith Bandara, also Senior Professor of Economics. Thank you very much, Professor, for joining us today and sharing your thoughts and your insights with us. Finally, the Governor of the Central Bank, Deshamanya Professor W. Lakshman. Thank you very much for taking the time out of your extremely busy schedule to join us today. Well, that concludes this particular session. Rai, it's back over to you.
Thank you, Deshan, and of course, thank you once again to each and every one of our panelists, a distinguished panel of experts speaking here this evening on behalf of the economy, of course, as they share their economic outlook, the nitty-gritty policies, the maybe, and of course, their candid views as experts of this very field. So I believe that our audience would have a better understanding, maybe a more in-depth understanding of what 2020 has left us with as we go into 2021, and what we can look forward to in terms of achievements, in terms of challenges, and of course, most especially in terms of opportunities for 2021. Thank you once more to each and every one of our esteemed panel of speakers this evening for taking the time. I know that there's so much going on even behind the scenes as we speak, and you've taken the time out to share your knowledge and expertise with the business community of Sri Lanka through AmTram Sri Lanka and its membership, and we appreciate that time and of course everything that you do behind the scenes to keep the Sri Lankan economy running at most oiled and optimal. Thank you for the optimism from all of our panelists. It leaves us also with a sense of optimism, because we know that this optimism is being shared with us from those who know the inner workings. Deshan, thank you for taking the time to moderate this session for us. My appreciation on behalf of AmTram Sri Lanka to each and every one of you once more. And of course, not forgetting to say a very big thank you to every single one of our viewers, your questions, your comments, and of course, do continue to keep an eye on the bulletin board and join us as we continue these resources and help you to navigate through this ever-evolving business environment. On behalf of myself, on behalf of the entire AmTram team, our panelists here this evening, thank you, have a good evening, have a wonderful weekend, and please do stay safe from this pandemic. God bless, good night.